So now we're recording the revision session on the 20th of December. So guys, you're all very welcome. And it's good to see you all. You see, I'm a man, I can't multitask, so I have to stop every time anything is happening there. So yeah, there are still people coming in. So I will let them in, and I'll send you the link as well. So just because I know a few people sort of were having queries and questions, and I said rather than sort of leave it to chance. And look, the last thing we want is studies to be interfering with your Christmas dinner. So we want you to go and enjoy the break. Now, by all means, use it as an excuse if you want to get out of talking to relations and tell them that, oh, you have study to do, and that's definitely allowed. So only for emergencies. So that is that. And what I just want to do is to put your mind at rest. So I have had a number of emails over the couple of days, and the kind of the 3 or 4 main areas that seem to be highlighted is number 1, just quickly to go through the solutions for the first assignment, that everybody knows, you know, what is expected and how that works. The other area that seems to have caused some problems as well is on your short tests. So particularly questions 7 to 10 seems to have caused some grief there. So I intend to go through those as well. I don't know whether then a couple of people have also asked me to cover off, just in terms of the scores and the risk ratings and all that kind of stuff, just how the whole scoring system works and how to do that. And then somebody else, and I'll see, and she is there, so I'm not going to mention her by name, I think is pulling a bit of a fast one now by asking me to have a look at question 1 on the second assignment. But anyway, look, asking you shall receive, the man said. So I will just go through, and if you haven't submitted your assignments yet, I'll just give you a bit of a format for that in terms of what to do. Because we have said to you before, when it comes to the exam, so assignment 1 and 2 are important from 2 perspectives. Number 1, obviously you get marks towards the total, which is pretty good. And also there is a question on the exam based on both assignments. And with those 2 alone, you will get through this exam if you never knew what, you know, FIFO and LIFO were. Do you know what I mean? So from that perspective, where's Michael? Who came in there? Oh, Martin. Sorry, Martin McKenna. So who's that there now? Sorry, I'm just trying to check 2 things here.
Sorry, I'm the last person to come in there, Denise.
Denise.
Yeah.
Ah, that's grand. Yes, you're impersonating Martin.
I'm coming up here as Denise. So.
Oh, you're coming up as Denise. No, you're
Yeah.
Denise. That's right. Martin, who came in as Martin there? Because I don't have a Martin on the.
Oh, sorry, it's me, Gemma.
Gemma.
It is.
It
Sorry.
sounds like you all right.
Yeah.
Right. Okay. So let me Gemma's plan. There you go.
Great.
Yeah. No, I know. No, I just to keep note of who's here and who's not.
Of course.
So that is that. So as I said, the 4 things that I'm planning on doing is going through assignment 1 quickly for you, going through question 7 to 10 on the short test 4, going through the workbook. There's a couple of areas in the workbook, particularly around the scores and the risk rating and the scoring models and that kind of thing, that I think might need to be explained. And then the last thing is just to give you the heads up and structure for the second assignment in terms of how to just go about it and all that kind of stuff. So that's what I'm planning. If you have anything else you would like me to cover, by all means shout, because today is about your learning, and I want you to leave relaxed and happy. And the other thing, again, this is just an additional session that we've squeezed in, and hopefully we'll get it wrapped up in less than an hour. again, I'm not rushing, so if it takes two, I'm happy to, you know, if you want to stay and you have questions and it's not clear to you, then by all means, I am not rushing away. And also to know as well that in early January, we will have the proper full revision session. Now that is on the 14th of January. And I know I put it into the email, and I have told you at the last thing that it is the 4th of January, just in case. I think originally, about when the course started, I would have put it down as the 7th of January. And then my son inconveniently decided he was going to get married that day. So, and he wouldn't move it for the revision, which is kind of,
Very selfish.
look, it's not very considerate of him, but anyway, that's so, and that's something I kind of can't get out of. So, so that's why, just to make sure everybody is clear, that the revision session is on the 14th, and that'll be an hour of risk and an hour of credit management, an hour-ish on both. And what we'll do is, for that revision session, we will go through the solutions to the mock exam that you would have received. So just to show you the solutions and walk you through them and make sure that you understand. And the mock exam, and you should have the mock exam at this stage, have you?
Yeah.
Good.
Yeah.
So if you have the mock exam, the real exam is going to look very like that. Obviously, the numbers will be different and the names will be different. In terms of the paper, the exam will be very, very similar to that. So your first question is going to be very similar to assignment 1, where you're given a trial balance and a set of adjustments, and you're asked to produce a set of accounts. And then the second question is going to look very much like assignment 2, where you're going to be given some data and asked to do some analysis and ratios and all that good stuff on it. Is that okay? And to be honest with you, and I hope the marking system is on the mock paper that you have received. Let me see if it is. Where is? No, I haven't got the mock paper here in front of me. So the marking system should be there. So with question 1 and 2 alone, you will get through the exam. You know, so fretting over FIFO and LIFO, if you don't know that stuff, it doesn't matter. This is just for information purposes, to give you an overview of accounting. We know you're not accountants, and we probably also can guess you probably don't want to be accountants. Still, it's good to be able to understand accounts and accounting and all that good stuff. So that is that. So let's start straight away, and we will go into assignment 1 with you. So you should have all submitted that, and hopefully most of you have got your marks now at this stage. And I am hoping you can read my screen. Is that big enough for you, or can you read it?
Perfect.
So, okay. So now, so this is your assignment 1. So there's the data that you're given. So you're asked, and again, always read the instructions very carefully. So prepare the trading profit and loss accounts for the year end. Now that year might have moved on. I might be looking at an old, the numbers are the same though. Because sometimes we reuse them. So you're given all your trial balance information there, and then you're given your notes at the end. So the notes are the things that happen after the year end that have a bearing on the accounts and will have a bearing on the overall figures. So the first thing we do is a schedule of adjustments, which includes all the adjustments that are noted. So that's all you have to do, is just adjust the accounts. So what they're saying here is depreciation is to be charged at 20% for all fixed assets, with the exception of premises, right? So there's your fixed assets there. You have plant and machinery as a fixed asset. Your office furniture and equipment is a fixed asset. And I think in this case, they are the only 2 fixed assets. So it tells you that depreciation is charged at 20% on all fixed assets. So for the year, it is that number there multiplied by 0.2. So we need to stick in an extra 4 grand depreciation on plant and machinery. And if we copy that and pop it there, we have to stick in another 2 grand for office furniture and equipment. Is that all right? So when we're looking at the adjustments, we say, okay, well, look, hold on a second. We have 11,000 depreciation on plant and machinery. Yeah. We now have an extra 4 grand this year that goes into our P&L account because that's an expense for this year. And our new figure for depreciation is going to be 15 grand, which is the 11 we already had and the 4, which is new. Yeah. And for our office furniture, we had 6,500. We've used up another 2 grand's worth of the office furniture this year. So now it's going to be 8,500 this year is going to be our new figure for depreciation. Yeah. Then it says, where's the next one? Increase the bad debt provision to 5% of total debtors. So just watch the preposition there. So it might say increase the bad debts by 5% or to 5%. So again, reading the question and understanding what we're looking for. So it says increase the bad debt provision to 5%. So there's our trade debtors, right? So if we just multiply our trade debtors by 5%, multiply 0.05, that is what we want our bad debt provision to be. So we want it to be 2215. We want it to be 5% of debtors. We have already got 750 in the account. So that means that the charge for this year is going to be, we take off the 750. So we need 1465 this year, plus the 750 we already have to give us the 2215 that we're looking for. So that is now my depreciation, my bad debts, and then it says accruals, accrue rates payable at 2,300. So we have rates payable there for 2,900. We need to stick in another 2,300 because we haven't got the bill yet. So now my new rates figure is going to be that plus that. So now we've 2,900 in the accounts. We've 2,300 that goes into an expense for this year. And then we have an accrual there and prepayment on our insurance, 5,500. So when we look at our insurance there, 12,000. So the 5,500 is a prepayment. So now we have to subtract that. So we put 12 grand through the accounts. 5,500 that relates to next year. So the charge this year in my P&L account is only 6,500. Is that all right? So in terms of understanding the adjustments, that's the adjustments. Now they're done kind of not very well and all over the place. When I'm looking at the solutions, I will present them all beautifully and all that sort of stuff. So I will show depreciation. It costs 20,000, 20% depreciation. That's this year's charge, and that's the balance forward. Are you with me? So that is, so I'm adjusting the figure here for depreciation from 11 that was in the trial balance by the 4 that I need to charge for this year to get a new figure of 15,000. Yeah. So that's my depreciation. Now, look, I've got these debits, credits, and all that sort of stuff. If you are heading for a merit territory rather than the distinction territory, just put in the 4,000, you know, just even this line here, even without debits and credits, just put in the adjusted figure in the middle and say, look, it was 11,000 in the trial balance. We now have to add another 4. It's now 15. My depreciation on furniture and fittings was 6.5. Now it's gone up to 8.5. There's my bad debt provision. That's what I need to put in as an expense this year. And my rates have gone up by 2,300 and my insurance has come down by 5.5 because that's prepaid for next year. So they are my adjustments. These are my adjusted figures. So then when I'm doing the P&L account, which is literally just putting the numbers into the formula that you have, which is sales less cost of sales gives you gross profit. In the expenses, just make sure that you include the adjusted figures. So the rates, the insurance, the depreciation, and so these all include the adjusted figures. And if you do that, total your expenses, subtract from your gross profit, you get your net profit, then take off your interest and you get your net profit before tax. And then you move to your balance sheet. And again, we have our fixed assets. And again, these are the adjusted figures with the higher depreciation figure. They're my total fixed assets. There's my current assets, less my revised provision. Then I have my prepayments as a current asset, and I have my accruals as a current liability, because all the adjustments that I make have to go in twice. They go into the P&L account and they go into the balance sheet. That's how it continues to balance. And then I have my long-term liability. Now, in the assignment, it says we have 10 years to go on the mortgage, and the mortgage is 200,000. So look, if there's 10 years to go on the mortgage, that's 20 grand a year. Now, look, we can get into the minutiae sums. I'm not going to do that with you. It's just a ballpark figure. So the remaining term on the mortgage is 10 years. So that's 20 grand a year. So my 20,000 here is a long-term liability. But what I'm saying is, because I have to pay 20 grand next year, 20,000 of that is a current liability because it has to be paid within the year. And the balance of the 180 is a long-term liability, which is over 9 years. So then when I add my working capital, or net current assets or working capital, to my fixed assets, subtract my long-term liabilities, I get a number. And then when I put in my capital, my retained profits, and then the profit for this period, which is this figure here, then lo and behold, the two of these should balance. Yeah, simple as pie when you look at me doing it. So from your own perspective, you know, it's getting the layout and the format right. Getting the numbers is more important from an adjustment perspective. And I think what's more important is getting your head around why you're adjusting them. So we have in our accounts, we have our rates in there because we've bills for 2,900. We know there is another 2,300 to pay for the year, even though we haven't got a bill yet. Therefore, we have to include expenses to get a true picture of what the accounts are. So that is the assignment one. Well, that's the first part of it, the P&L account. That will be question one. Let me see, here's Jennifer. You see, I have there we go. So that is that. And look, when you get to it at the end, you know, make sure that you do it in exactly this format: fixed assets, current liabilities, long-term liabilities, then financed by. And look, if these figures don't balance, you know, boo-hoo, you know, you've probably missed something. Now, I'll talk to you more about that in the revision session in January. Just at this stage, just do the figures as best you can. If it balances, yes, that's a double check. That looks that everything is okay and you've included. If it doesn't balance, it's not the end of the world. It meant you know, added something you should have subtracted, you left something out or something of that nature. And I'll give you hints and tips in terms of how to find differences when we're looking at a set of numbers. You know, if there's 80 marks for this question, and you'll get marks for everything that you get right. And if you leave out a number, you know, you might be deducted 1 or 2 marks for that. You're still going to fly it, even if it doesn't balance. Is that okay? So just it's just knowing what goes into the P&L account, what goes into the balance sheet, what your profit is and what your working capital is and all that kind of good stuff. So that is it. And that is your question 1 on the exam, and it's question 1 on your mock exam. So practice those. And I have sample trial balances. If you want stuff to sample, I can send them to you if you're going to be bored over the Christmas, that you can be working on, or after Christmas, or whenever you want them. So that is the first part of the assignment. The second part then is just the bad debt provision. And being credit controllers, we just thought, you know, you might need to know this stuff. So look, you were given the figures. In the notes, you're also given a formula. Now, look, this isn't a written in stone formula. This is just a guideline in terms of what's recoverable. So, and those of you who are very observant might have noticed there's different percentages in the credit management notes if you're doing credit management. And now I do need to put in a note of clarification into that. And the fact of the matter is, though, look, it's a guideline. If you say 90, 85, 75 or 98, you know, different businesses are different, and this will sort of change over time, and trends will form in your own company that you know what is recoverable. So these are just a guideline just to give you, which is better than nothing. And again, if we're trying to explain something to an auditor, better to have a formula than a blank sheet of paper. So I'm saying, look, 100, 95, 90, 75 and 10, that is the answer. And then literally we just multiply. You can see the formulas there. I'm just multiplying 170 by 95. So that's how much I'm going to recover. That's how much I'm going to recover. That's how much I'm going to recover. So the difference then between what I'm going to recover and what the balance is what's irrecoverable. So what I'm saying here is there's 8 grand in 30 days, 5 grand in 6 days, 3 grand 90 days, and 9 that I just don't think I'm going to recover. So we have 26 grand, which is a bad debt provision, just in case that doesn't happen. And in terms of splitting that between a general and a specific, if it's a specific provision, we have to be able to put customers' names and values beside it. So one good way of doing it is to say, well, look, we're going to take a specific provision for anything over 150 days and a general provision for the difference. So on that basis, we're saying, okay, we're saying there's 2663 irrecoverable. I'm going to take the whole 150 days as a specific provision, and then the difference is my general provision. If you wanted to, let me just let Angelina has just joined. If you said to me, Dec, do you know what? You know, I want to include the full, rather than 90% of my 150 days, I want to include all of that. And you came up with a figure here of 27,654. That's fine too. That will get you full marks as well. Is that okay? So again, poring over these, but it's just knowing and understanding the numbers, and then just giving an explanation of where you got the numbers and why. And you might say, look, I know the note says 95 in 30 days. I know my business, and I think I'll get 97% of that. And if you say 97 and that changes all the figures, then that's, and you can explain why you came with that figure, then I'm quite happy with that as well. Yeah. So now I'm going to stop that and look at you all. So I'm going to now stop sharing. Here's Aidan, admit. Boom, 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 boom. Stop sharing. So now we have everybody, and I saw Angelina coming in there as well. There you are, up in the top corner. Ah, yes, you're very welcome. Home after a long day's work. So, guys, before I move on to the next section, are you clear about assignment 1, what was required, and the biggest mistake that anybody made is overthinking it? You know, let's not make this complicated. It's literally putting the numbers in where they are. Denise, you're going to say something.
Yeah, I think that's what I do. And then I get kind of flustered with it. And then I kind of race to get it done because I want to get it out of my way, you know.
Well, that's understandable, yeah.
No, that's what happens. And I know in a kind of a practical setting, if you gave it to me in a department of accounts and said, do that, I'd be able to do it, no problem.
Yeah.
And piece by piece. But I mean, you know, when you've it all in front of you and you try to get, you overthink really is the answer.
You overthink it. And then you start to question yourself and doubt yourself and all that kind of good stuff.
Yeah, and your confidence takes a terrible dip and you just think, give up and throw in the towel.
Yeah, well, let's not do that. We're
Um,
we're better than that.
Are
I
you?
find I'm like that as well, where kind of like thinking that the exam is only like 2 hours long, and I'm like, how am I going to get all this done? Because it's okay sitting there and kind of taking your time and doing it,
Yeah,
but I get kind of a bit overwhelmed, to be honest with you.
Yeah.
Like I'm kind of looking at it all, going, oh my god, this. I just feel like giving up.
yeah. Well, that's exactly why we're here tonight, because that's the last thing we want you to do. And in terms of the 2 hours for the exam, again, you look at the marks that are available for each question. So how that breaks down is you have 40 minutes to do question 1, you have 40 minutes to do question 2, and then you have that's 80 minutes. So then you have another 40 minutes to do. So it's 20 minutes each then for the smaller questions. So in terms of getting the trial balance, doing your adjustments, and writing out your trading profit loss and balance sheet, 40 minutes should be more than enough to do that.
Can you go through the adjustments again slowly?
course I
Just
can.
because I'm just struggling to understand like where you put stuff in the debit column or in the credit column,
Yeah.
or where, or if
yeah.
you need to like add or subtract, or like I'm just
Yeah.
struggling to understand where to, like, I understand that you said, you know, it's a matter of understanding like where you should
Yeah.
put the numbers, but like that's what I'm struggling to understand is
Okay.
like, even just, you know, when it's the first one, like with depreciation. So if for example, if they say charged 20% depreciation against the fixed assets, it's like, okay, so do you get 5% of your fixed assets, and do you put that, do you adjust the number, or do you put it in the debits, or do you put it in the, like, that's what I'm struggling with, is just
Okay.
what to do with the number, with the figure once I've calculated.
Right. Okay. So let's just take it one step at a time. And the question is so if you read the notes very carefully, it's very, very clear. It says depreciation is to be charged at 20% for all fixed assets with the exception of premises. So your depreciation is 20%. So let me change that into English. So what we are saying is that as a business, we're hoping to get 5 years out of our fixed assets. Effectively, that's what I'm saying. So I'll depreciate them. If I'm going to get 5 years out of an asset and I buy something for 100 quid, I'm going to charge 20 quid a year in depreciation against that asset. So at the end of 5 years, it has a zero value. All right. So now that 20 quid a year is an expense for the current year. So that's that. So it says depreciation is to be charged at 20% for all fixed assets. So on that basis, in this example, I only have 2 fixed assets. One is plant and machinery, and that cost me 20 grand. So I have to get 20% of that. So in this case, that is 4,000 quid. So I just multiplied my 20,000 by 20% to get 4,000. So that's how much of that asset I used up this year. That's my depreciation. So depreciation, if you look at depreciation, is how much of the asset did I use up this year? And so I've used up 4 grand's worth of that, the plant and machinery this year, and I used up 2 grand's worth of my office furniture this year. So that's, so in terms of the books, if you look at the book, I had 20,000 worth of plant and machinery at cost. I'd already depreciated it by 11,000 because, you know, that's in my trial balance. So that is that. So I already had a charge of 11,000 in my accounts for depreciation. So my plant and machinery was only worth 9,000 at the start of the year. Because of my instructions to depreciate it by 20%, I've taken another 4 grand off. So now my depreciation figure is 15,000. The 11 I have in the trial balance plus the 4 I need to do this year. And now the value of my plant and machinery is only 5 grand. So when I look at the solution here in terms of how I presented it, now look, the thing about it is, you know, and maybe this is what's causing the confusion here in terms of debits and credits. You know, I am quite happy if you just put in a middle column that says adjustment. Are you with me? And you add your 4,000. So I'm increasing my figure on depreciation. I had 11,000. I now have another 4,000 depreciation. So that increases it. My depreciation increase. My bad debts, it depends on the bad debts, whether that's an increase or a decrease. So the assignment said I want them adjusted to. So an increase in bad debt provision to 5% of the total debtors. So there's my debtors, and 5% of that is 2,215. So I only had a provision in for 750. So now I need to increase my provision by 1465 to bring it to 2215. Are you with me? But
you know the way when you put, like, say for example, if you accounted for that $4,000 and you're supposed to do the same thing on the other side, on the other side, how do you balance that? Like, where you, like, because you know the way they need to balance on both sides, the debit and the credits columns?
No, you're
It's the charge for depreciation.
Yeah, look, I hear where you're going with this. I do, and like what where you're going with this is into accounting and two-sided entries and all that kind of stuff. So like creating T accounts and having debits in one side. So I debit the giver and credit the receiver and do all that sort of stuff. No, that's for accountants, right? From us, all we're doing at this stage is we are only preparing a set of accounts. Now what I did here was I did, from a depreciation charge, I did show the 6,000 as depreciation charge and 4,000 for plant and machinery and $2,000 for furniture and depreciation. I did that just in terms of balancing the books. If that's causing you confusion, we're not here producing T accounts and just, all we are doing is adjusting the balances in the trial balance to reflect the reality after the adjustments that you're given. Are you with me? So if you wanted to just get rid of that completely and put in adjustments, and I just have one column with all your adjustments in it. Are you with me? I'm quite happy with that as well, because sometimes debits and credits, you know, confuse people, and that's why the last thing I want to do is confuse you. So, you know, you could just have in your schedule of adjustments, this is the balances, this is in your trial balance, and this is your adjustment, and then this is your adjusted balance. That's all we want to get to. So in terms of debits, credits, debiting depreciation charge, crediting plant and machinery, that's not the purpose of this exercise. The purpose of this exercise is to produce a correct set of accounts. So, you know, if that's causing you confusion, then, you know, in the words of Tommy Cooper, don't do that. Is that okay?
Yeah.
Does this make sense now?
Yeah.
You know, so if that's your schedule of adjustments, that's fine. So now you're saying, look, that was in the trial balance. That's what I have to adjust it by. That's my new figure. That is fine. That's the purpose of what we want to get here. And, you know, debiting depreciation and or crediting depreciation and debiting your plant machinery, that's not what the whole thing is about, right? So maybe that's a lesson for me in terms of revising notes. Rather, this is kind of accountingly correct, And I can see why, if you're overthinking it, you know, do I debit this or credit that? That's the last thing I want you to get into. This is a credit risk paper where we want you to understand a set of accounts, be able to make sense of it. And the reason for this background is to show you where the accounts come from and how it shows a clear picture for a calendar year. Is that okay? Please, anybody else jump in now and whatever. So if you just want adjustments, you know, that's the purpose of this exercise, not getting into debit this account and credit that account and do all that sort of stuff. That would, you know, and I did accounting back in the day. Anyway, I'm not going to, and even with me, debits and credits, you know, yeah. And anyway, it's always the opposite of what you think. So, and that's why in accounting terms, everything in accounting is backwards to credit. So, you know, in terms of if you know, and that's where we do get confused, and that's why just getting to understand accounts and finance is probably a good idea, because it's kind of a foreign language to us. From a credit risk perspective, we have to understand it, not from an accounting perspective. Is that all right? Oh, Angelina's come back in again. No, Angie. Anybody else? Is that? Do we understand what we're doing and why we're doing it? Or please ask more questions. Or are you happy for me to move on at this stage? So it's literally just take the figures from the trial balance and put them into that template, and take the adjustments and work out what your adjusted figures should be. And in an exam situation, show your workings. So even if you show your workings, you know, I'm not saying the way I did it now all over the place on the spreadsheet, but if you explain where your numbers are coming from, then that counts for an awful lot as far as we're concerned as well. So just tell us what you're doing and why you're doing it, and that's then we'll see the logic and see does it make sense. And you know, if you forget to carry the one and you're out at the end of, you know, your balance sheet doesn't balance, you're going to drop a couple of marks. If you have it in the right format and you've most of the numbers in there, then I can assure you, you will get most of the marks. Silence. I will take silence as happiness, will I? If there is anything else, and look, I say we'll have another revision session in January, you know, a week before the exam, just to put your minds at rest. I do have, and I've said this to you, sample trial balances. So if you want, and have I given them to you, Angela, Lena?
Yeah, and I sent 3 of them on to the guys.
Oh, you sent them on, did you? Okay.
Yeah.
So now when you say 3, was it 3 in one spreadsheet or 3 different spreadsheets?
Yeah, and I think you have further another set
I
as
have
well,
a
don't
couple
you?
more. Yeah, I have.
Yeah, perfect.
So
Yeah.
so yeah, and sure I keep them as a secret because yeah. So yeah, I will forward them on to you after this session tonight. So I think there's 3 sample balance sheets, and then there's 3 more, and then I think there's 3 more on top of that as well. So if anybody wants them, Angelina will have them, and I'll be nice to you, Angelina, as well. I will send you the solutions. So and what I'd advise from a student's perspective, if you have the questions and the answers side by side, you will look at them and you go, that's simple. And I think you said it there, Deborah, earlier as well. It's when you're looking at a blank page and you're going, here, you know, where does everything go? And that's when it gets, you know, complicated. So when you get the sample trial balances, have a go at them on your own and see how far you're out. And again, with the mock exam, have a go. And just again, to put your minds at rest, just time yourself for 40 minutes. When you're doing the mock exam, for question 1 for the trial balance, just set your alarm on the phone for 40 minutes and see how far have you got in the 40 minutes. And that's why you don't have time to check every number and double check everything and check all your thoughts, you know, in terms of transcribing it and making sure you've put in the adjusted figures and getting the layout. That's where you'll get the marks. And if you have time at the end, by all means, go back and double check it. That's fine. You know, my advice is when the alarm goes off after 40 minutes, stop. You've got whatever marks you're going to get. Move on to the next question. Question 2 is another big marker. 40 minutes, set your alarm, and then 20 minutes in for each of the 2 small questions, whichever 2 that you find easiest. Now, you don't have to do question 1 and question 2 first, because that's where most of the marks is. I would recommend you do it. If you want to get the 2 little questions out of the way, that's okay too, as long as you don't give them more than 20 minutes each. So, and there's some of the questions that, again, if you know your stuff, you should be able to do in 10 or less. But that's for me. So that is that. So look, guys, if you have questions, please, and look, even if you think you're asking the same question again, my job here is to explain it. So if I haven't explained it to your satisfaction, please tell me, because I'll try it a different way, or maybe Angelina, you'll try to explain it, because sometimes it's just a word or a sentence, and then you go, yeah, now I see where that's coming from. And then it's like somebody switched the light on and all is revealed. And that's part of what I'm hoping tonight will be for some of you, if it hasn't been already. Is that okay, everyone? Will we move on? Move on. Okay, so I'll get rid of this. So that's risk assignment 1. And I think you have most of them in, Angela, now at this stage, haven't you? There's all my secrets. That is fine. This is assignment 2. No, you're not getting that now for the moment. What I want to move on to is risk test 4, because some of you, and particularly questions 7 to 10, seems to have caused some grief with people. And you know, people saying, oh, question 7, we don't have a sales figure. You don't need a sales figure, because so question 7 says very simply that if a company writes off bad debts totaling 48,500, how much additional sales? So we don't need to know the sales. We just know how much additional sales would they have to generate in order to recover the loss. The margin is 32%. Now, we threw in the fixed costs. I said we just to involve Angelina in the conspiracy. No, I'll take full responsibility. It was me.
Yeah, you'll have thrown in surprises.
Not gonna lie, Declan, that threw me off, because when I looked at the formula underneath, I thought I was supposed to be doing it by that formula.
Yeah,
and it completely threw me off.
Yeah, and maybe because fixed costs. So look, all you do, and maybe that formula should be taken out, and I think because that is on the short test, isn't it, Angelina?
For the
I think
I'll have the short test here if you wanted me to share it, or
because or maybe I have it too.
Like, I thought I was adding the fixed costs to the 48% and then dividing it, and I was like, where am I coming? And
even if you did, you know, what you would have got is, you know, 867,000, and I have both answers in the solution. So look, but the fact of the matter is, you know, you had 48,500 of a write-off, and you want to know how much additional sales do you need to cover that. So we just have to divide that by 0.32, and there's your answer, 151,563. So again, I suppose it's just checking understanding as well. So if your margin is 32% and you want to see how much more sales do you have to get to cover a 48,000 write-off, the answer is 151,563. So literally just, now if you know, the fixed costs, sorry if that confused people, we kind of put it in to see who understood it. But no, reading the question, it's just how much additional sales would you need to generate. So you just literally divide whatever profit you need by the margin percent and you get your answer. Yeah. And if you did include fixed costs, you know, that's a correct answer. And 150, 1563. So we're saying both of them are either answer is acceptable. So that's the marking system there. For question 8, from the following information, the sales required to achieve the break-even point. So the break-even point is your overheads are 57,000. And again, all you have to do is divide 57,000 by 30%.
You're not sharing anything there.
Oh, sorry. And I go through all this thinking I'm brilliant. Sorry about that. Sorry. Let's make it a bit bigger for you. Not too big. Yeah. So I got to question 7. So here is question 8. From the following information, calculate the sales required to achieve the break-even point. So our overheads are 57,000. Our margin is 30%. So all I have to do is divide my overheads by the margin percent, and I'll get my 190,000. It's literally that simple. Just divide your overheads by your margin percent, and that is, so you need 190,000 in sales at 30% to give you 57,000 profit. And, you know, sometimes it's easy to, you know, and particularly when we're talking about bad debts, you know, a small amount of bad debts can require a huge amount of sales, depending on the margins that you have to get. So that is that. So literally you just divide. So that's the figure I want to get to. That's the profit. So if I have 190 in sales and multiply that by 30%, that'll give me my 57,000. Yeah. So, and then question 9, based on how much sales are required to produce a profit of 52,000. So what we're saying here now is our overheads are 96,000. I want a profit of 52,000. So I add the profit that I want to my overheads to see how much do I need to generate in terms of profit. So it's 52 for profit, 96 for overheads. So in other words, I need to generate 148 grand. Just divide that by 32% or 0.32, and I come up with a figure of 462,500. So literally just divide the profit figure that you're trying to get by your profit percent, and that's what gives you your net sales figure that you want to achieve. Right?
Can you repeat that, please? I haven't had the time to write it down.
Okay, well, 2 things. Number 1, I hope you can see the screen sharing, and also I'll send you a copy of the recording. Right. So in question 9, it says, based on the following, how much sales are required to produce a net profit of 52,000? So if I want to get a profit of 52,000, right? So there's 52,000. I also have overheads of 96. So how much profit do I need on my sales? I need 148,000 profit. And to get 148,000 profit, I just have to divide that by my margin percent, which is 32. So that's telling me now that I need to generate 462,500 in sales, which at 32% will give me 148,000 profit, of which 96,000 goes to my overheads, which leaves me with a profit of 52. Yeah. So that's the profit I want. They're the bills I have to pay. When I add those 2 together and divide them by my margin percent, that will give me what sales I need to generate as a business in order to pay my bills, and a 52 grand left over in my pocket. You see, I wish I could interpret silence as happiness. I'm getting an uneasy sense of silence at the moment.
Declan, do you mind if I ask you to go back to
I
question
want
7
you
again,
to ask
please?
me all the questions in the world. Yes, please do. Yeah, go on.
Can I just see question 7 there again, if you don't mind, please?
Question 7. Yeah.
Yeah. I think the formula, why it was there or what it's representing, kind of threw me on that whole question.
Yeah, and I think I've accepted that the formula probably shouldn't, is probably a mistake if it's true. Yeah, so take that as our mistake, and we'll admit if we have made mistakes as well.
Okay.
So, you know, if that's thrown you, you know, again, if you just read the question, they write off that how much additional sales will have to generate in order to recover the loss. In that question, fixed costs is not doesn't even come into it, you know. So that is that, and putting the formula in kind of compounded it as well.
Yeah, I
So,
think the formula is what
anyway,
you're kind of saying. The fact that it was there, I suppose. Yeah, brilliant.
but
Okay.
as I say, knowing that, we said if you gave me the answer 867, that would be an acceptable answer,
Okay,
as well as
perfect.
the correct answer, which is 151.
Okay, thanks, Declan.
Right. So come on, please, more questions. I know I just sense you have questions out there, and you're just afraid that you look stupid. I promise you, if I'm not explaining this correctly, I'm the one with a problem. So please stop me. So that's that question. And then question 10, in terms of, these are extracts from final accounts. So there's 3 questions here. The margin percent. So again, you're given the, and you can look at your percentages, all the rest. So what is your margin percent? So your margin is your, so you say, well, I don't have a margin. You do. You have your sales and you have your cost of sales. So if you subtract your cost of sales from your sales, that gives you your profit. Yeah. So in terms of your profit, so, and then you divide your profit by your sales to get your margin percentage. So in this one here, like I've done the formula there. It's C117 minus C116 minus C17. So I'm subtracting the cost of sales from the sales and then dividing that by my sales, and that gives me a margin of 27%. And again, the same here, dividing my sales by my cost of sales and dividing it by my sales to get the margin percent. So the margin percent is the profit divided by the sales. That's what your margin percent is. Your debtor collection period. So again, your debtor collection period is in days. So literally you just divide your debtors by your sales and multiply it by 365 to see how many days sales does that debtors represent. So we sold 359 in the whole year. We're still owed 74,000 at the end of the year. So that represents 75 days sales outstanding. So literally it's just dividing your debtors by your sales and multiplying it by 365. And then for your creditor payment period, again, what we're doing there is we are dividing our creditors figure by our purchases, our cost of sales, and either are relevant. Purchases are probably more accurate. Look, if you take either figure, when it comes to it, both will be acceptable. And what we're saying is that we bought 263,000 for the whole year. There's still 61,000 in creditors, which means that's bills we haven't paid yet. And that 61,000 in creditors represents 85 days purchases. So that's my credit period. So there's my 3 formulas copied across twice. Yeah. Silence again. Does that, so literally it's just take, yeah, go ahead, who's that?
No, I said it's okay. It's good.
That's okay, is it?
Yeah.
So literally just look at the formula, and if it says, you know, debtors divided by sales, well then you take your debtors and you divide it by sales. And you know, as I say, what I've done here is I've just put it in a formula. And the exam paper, remind me, Angelina, the exam paper is in Excel format, isn't it? Yeah, I'm 99% sure. Yeah,
Sorry, yes, it is. I
It is
was
in
on
Excel.
mute there. No, it is, yeah.
that's grand. So look, guys, the because the exam paper is in Excel format, you know, and look, it's not an Excel exam, so we're not going to be testing your formulas or whatever. With the knowledge of Excel, if you want to do it in formula format here, that's your ratio. So that minus that divided by that, bump, then brilliant. And in fact, from a correction perspective, it will be easier to correct, and you have a chance of getting more marks. Because if you get the method right and the number wrong, you know, you might get half a mark for it. If you just give us a number and the number is wrong, then we can't give you a mark for it. Do you understand? So they are tricky little questions, and it does involve an overall understanding of the course. Again, I would say anybody who had difficulty probably didn't realize they were so damn simple, and they're looking for complexity. Where
Hi Declan, sorry, I have a question there.
Please do.
How
Yeah.
did you establish which company was the highest?
Oh, now hold on. Now hold on. Which company appears to be the highest risk? Okay. So well, that's so there's the three ratios, and basically again,
Sorry, I'll pop in here as well. It's Kasia here.
Yeah.
I don't know what I'm doing wrong. I look at it totally the opposite way,
because
because to me C has the lowest risk. It has the highest margin, the highest creditor payment period, so that's good. Then the debtor, it's kind of okay in between A and C, but I actually gave my answer as between A and B, ruling out C completely, because to me it has the best figures. So I'm obviously looking at it totally wrong.
I was just wondering if there was a calculation that you did to establish that. Or...
Yeah, there is, and I'll get to that when we move on into the risk calculations.
Yeah,
I'd
I'd look at that, like kind of the creditor payment days. You're not paying your creditors until nearly 100 days, and the money coming in is over 2 months, 2.5 months. So that's the way I practically look at it.
Yeah, and you see, again, this comes back to interpretation. And so if an accountant was asked to analyze the ratios, an accountant would tell you that C have the best creditor ratio, and that is because they are looking from an accounting perspective, and whatever money you don't pay your creditors is money that you have in the bank. So it's better to have money in your bank than in your creditor's bank. So in an accountant's head, the higher the creditor days are, the better it is for the business. We are credit people. We are different. And we like people who pay their bills on time. And the fact that company C is taking 100 days to pay, I would, if I'm making a decision whether to give them credit or not, that looks on the high side to me. But look, the fact of the matter is, you know, you can tell me that, look, that in your opinion, because company B has the lowest profit margin and well, but they're the best, but if you say to me, because that's based on margin, because they're doing this, because, you know, they're not getting paid themselves or whatever the case may be, you know, that like all of this is a matter of interpretation. Now we do give you some formulas later on, and I'll cover them as well. So, you know, sometimes, you know, there can be more than one answer depending on what way you look at the figures. So in terms of this, you know, the number one would be sort of calculating the numbers, which you get half the marks for doing that. And then, you know, working out. Now, because I'm a sad person, I worked out the kind of the cash flow gaps between the companies as well. So just taking debtors and creditors, like the difference between the debtors and creditors. So look, there's 1,000 different ways of doing it. We're just giving you one. To me, I like people who pay their bills quickly, and companies who want to do business with me, who are taking 100 days from other suppliers, I would see that as a high risk factor, and that would sort of mitigate against them. All right. But let me get into the sort of the quantitative ways. So this is kind of just a matter of opinion. So we're saying you don't enough. So base assessment. So of these three, the highest creditor payment period, and therefore it's the highest risk. That's my read of it. And again, I'm not given this. I'm not going to save any of the changes there. Let me just move on to risk assignment 2. No, risk.
Declan,
Yeah.
I don't think you realize you're actually not recording.
Oh, I thought I was.
No, it says start video. There's a red line through it.
No, that's your video, I hope.
Oh, okay. I hope. Okay, that's all right. Okay.
You're afraid of the life out of me now. No, I
Sorry.
am. Yeah, thank you.
Sorry.
Oh, look, I'm capable of doing that too. So now, in terms of trying to come up with some kind of a scoring model, based on the ratios, and again, all of these are just models. This is not written in stone. Thou shalt, you know, do it this way. This is a model. Now, I must say, on a personal level, like I've been group credit manager for a number of multinational companies, and a lot of the methods I'm sharing with you are things that I did day in, day out. So if I had 3 distributors and that I needed to make a decision about, I would get the 3 sets of accounts, pop the numbers in, work out the ratios, and then what I would do is this in this model here. So all you do is, and this is your question 2 in the exam, you just you have your 3 sets of data, so sales growth, and all you do is you look across and you think, I will score. So what we're saying here is, so you score 0 for the best, so 0 equals best, you know, 2 equals worst, and 1 is the middle, because we've 3. But again, in the real world, you can do this with 20 different companies if you want. The methodology is still the same. So I look across here. So these are my 3 companies. These are the gross profit margins. So I'm looking, company A is the best there. Yeah. Company C is second best, and company B is the worst. So I'm just going literally through these. Operating profit. So again, the higher the profit, the better it is. So that's the best profit. That's the second best profit. That's the worst profit. Operating costs. Now costs, the lower the costs, the better it is. So in this case, that is the best. That is the second best. And that is the worst. Are you with me? And literally we just go down and put in, so the current ratio. So the higher the current ratio, the better. So like that one, that's okay. That's the worst. And quick ratio, again, the higher the better. Like that one, that's the second best. That's the worst. Stock turnover period. So stock turnover. So the lower the stock, the better it is. Sorry, stock turnover period. Let me see, what am I doing here? So that is the number of days stock. I'm confusing myself with my words, and I don't want to confuse you. What I'll actually do, risk workbook. Yeah, what I'll do here, yeah, I'll just make this bigger for you. In the words of Delia, now this is one I prepared earlier. So what I've done in this graph here is I've just put in the zeros, ones, and twos based on the best. So when I total up my scores here, company A comes in as 6, which is a very low score. And because I'm giving 0 for the best, the lower the score, the better it is. So company A is the best, company C is second best, and company B is by a long shot the highest risk company within this gambit. Are you with me? And because I have, 10 different ratios, so I have a total of, the worst possible score you can get is 20. So then I'll just divide it out to say, well, look, between 0 and 6 is low, 14 to 20, 7 to 13, bump, and then I allocate. So I'm saying that these are low risk, these are high risk, these are whatever. So it's literally just working out the ratios and saying that's the best, that's the worst, that's the best, that's the worst, all the way down. And then you get a score for each one. Now, does a score of 6, 16, or 8 mean anything to anybody else? Maybe not. To us, that is proof that these are the lowest risk customers based on those financial figures. So if you want me to give credit to company A, quite happy to do that. Company C, yeah, I'd be happy to do that as well. Company B, no. Yeah, but like, again, looking at it, like like from a current ratio perspective, they're certainly solvent. They have a quick ratio of 1. Are they particularly high risk? No, I'd still probably do business with them. In this universe of 3 companies, they represent the highest risk within that constituency, or whatever you want to call it. Can I do business with them? Again, that's our job from a credit perspective, is to make that decision. And again, because to me, current ratio, stroke quick ratio, they'd be the 2 key determining factors from my perspective. And if they are solvent, that goes a long way to making a positive decision in terms of doing business with them. Is that okay? Question.
Can I ask a question?
Please do, yeah.
So do we, in order to apply this 0, 1, 2 best, worst, middle, do we need a full selection of ratios to apply it?
Yes.
Okay. So applying that scenario to that last question in risk test 4, where we had just the 3 ratios, it wouldn't have been advisable to determine which company was the highest risk. We just had the gross profit divided by sales, the debtors, receivables, and the creditors. Those are the only formulas we used, and I think that's what I used to determine which company was the highest risk. And well, I got a different answer to what you got, so I'm wrong, but I suppose
no, hold on, you are not wrong. No, and this is the point. This is the point, that if you the whole thing, and this is probably why risk assessment is probably so much more difficult than accounting, because accounting is black, white, right, wrong. The numbers are either right or they're wrong. Because we're in a credit risk assessment. So if you applied a scoring model to the figures and said, on the basis of the scoring model, company A is the highest risk, then that is, if that is the criteria that you pick, then that is fine. If you so what you have to do is pick your answer and then give an explanation as
Explain
to
why you picked
the
it.
reason.
Okay.
So look, I applied the scoring model to it, and on that
Mm-hmm.
basis, they had the highest score. They are the highest risk.
Okay.
That would be 100% answer.
Acceptable.
And
Okay.
even if the person beside you got a different answer because they used a different criteria, then they would be right too. So
Okay.
now, yes, you can get questions, you know, that if you said to me,
Mhm.
company B are the lowest risk, now that's clearly wrong.
Yes, I understand. Yeah. Okay.
And but the fact of the matter is that if you know, and sorry, your very first question that I answered far too quickly, you know, do you have all the ratios? You work with what you have. So I think in this we have 10 different sets of figures that we're working from. In the assignment, if I remember rightly, it's 12.
12.
So you know, or you can pick your top 6 or 8.
Okay.
You know, so
Okay. It's
kind of
applying
movable
the
figures.
method is okay, even if you have a few scenarios or a few
Exactly.
ratios rather. Yeah, that's
Yeah,
perfect.
exactly.
Okay.
And what I would say is, though, make sure you pick sort of key ratios like
Yes.
current ratio, quick ratio, those kinds of things. Like if you get into obscure, you know, return on investment or
Okay.
some obscure that we really don't care about, then that can distort figures.
Okay.
As long as you're using, you know, and I think
Appropriate
these
ratios, okay.
these 10 ratios here. And even though there's 1,000 ratios in the accounting books, you know, those 10 are all I ever needed,
Mhm.
because that tells me whether they're liquid from a payment perspective, how well run the business is from a management perspective, and how profitable the business is from an ongoing perspective. So that's the only 3 things that I need to know about a business. Are they solvent? Can they pay their bills? Are they profitable? Will they stay in business in the long term? And is the business well managed, that they're paying their bills and getting paid? Once they tick those 3 boxes, from a practical credit management perspective, that's really what I'm looking for there.
Okay.
Is that okay?
That's good. Yeah, that's perfect.
So,
Yeah, no, that's good to know. Yeah.
So, and then there's no definitive right or wrong.
Once you explain and justify why you've chosen that method of analysis, that's
And
probably,
that's fine.
yeah, perfect.
You know,
Okay.
and that is
Yeah.
acceptable. And back to my, you know, 95% for provisions, 95% of 30 days and 90 and 80. If you use different percentages and say, well, look, based on my industry and the trends, these are the figures I use, then that's perfectly acceptable as well.
Okay. Okay.
So it's not about the number, it's about the understanding and the application of the understanding.
Perfect.
So
Thank you.
that is that. I think I put in test 4. What was test? No, it's not test. No, I had, this is workbooks. You know, no, test 6.
Don't look at you.
Oh, this Z-score thing. Yeah, I include that as well. Again, look, this comes from, I think it comes from a UK. It's called the Credit Management Handbook, that was written, you know, a number of years ago by a man called Glenn Bullivant, who's still doing the rounds. It's just, it's another way, and it's coming from a sort of a published source. If you like it, you like it. If you don't like it, you don't like it. It's kind of more prescriptive, looking at trends and looking at all that sort of stuff. And again, you just score them, you know, 0, 1, 3, whatever the case may be.
Revision.
You
That
know,
guy.
who's sorry, so I can't see. To be honest with you, the one that I would prefer is this comparative scoring system, because you know, I can vouch that this really works in the real world, and it gives you an overview of, you know, a number of ratios. And if you pick 6, 8, 10, 12, you know, that's a matter for yourself. And obviously the more ratios you pick, the more accurate it will become. That's
If it all was going to be 20, that's the highest for your picking for your scores. So low,
yes.
It's always that. Okay, so that's
no, hold on.
How is the reason calculated? Yeah.
So I came up with a figure 20 because the highest score is 2, and we're using 10 ratios.
Okay.
So on that basis, 2 times 10 is 20. So the highest that any company in this example can score is 20. So they can get a 2 in all 10 categories. The 20 is, so that's the highest possible score. And the lowest possible score is 0 because they're the best in all the categories. So for example, in the assignment, we have 0, 1, 2, 3. No, we have 0, 2. Is there 3 or 4? I can't remember. So if it went, you know, if there was 4 companies and it was 0, 1, 2, 3, and there was 12 ratios, well then the highest possible score in that case will be 36, which is 3, which is the highest score, 12 ratios. That's where that number comes from. So that's a movable number, not a definitive.
Declan, sorry, may I just ask, so for the assignment, we can use the same scoring answering for question B in the part 1, isn't it? Because there is a question B is about determining which one. Sorry, I just find it hard to find it now on my screen.
Risk assignment 2. No, but I have it here now. So let me just so risk assignment. You provide with financial data for Amazon. So I'm telling you the 12 ratios.
Yes, and then exactly, and then we need to answer the question. In your opinion, which one, which year was the most profitable or whatever? So here again, we can use the scoring option to determine which one it is really, right?
Absolutely. So what we can do is we can do. Now I think I have these backwards. So it's year 1. Year 2, you know, etc. And then we just calculate. So for year 1, the gross margin percentage, and we know the gross margin is the gross profit divided by the sales. So it is where's your gross profit divided by your sales. So now I can just format that into a percentage. So if I format my cells, come on, show off, why don't you? Why is this not working? Never seen that before. Format cells, percentage, and we'll do it to one place of decimal.
You want some?
There's no point doing 47. So there's my gross margin percentage. And so in this case now we're going to have 36 sums to do. So that will take you a couple of minutes to do, and then we do our scoring model. So do I give you a sneak preview? Sorry, no, I've actually given you.
No, it's here. Yes, I just wanted to say, but you know what I'm struggling with sometimes. I don't know, maybe it's my English as well, but I just don't understand. Say, interest as a profit of net profit. Is it like should that be high or low, or operating cost to sales? The best is the lowest, right? This is what I'm just trying to find. I'm finding it difficult to interpret what I'm going for. Some of them are them are obvious, but others I'm just kind of maybe I'm reading in too much.
So the simplest explanation for that is things that you like, the higher the number, the better. So I like growth, I like profit, so things that I like, the higher they are, the better it is. All right. Things I don't like costs. And so those things that I don't like, then the lower that number is, the better it is. Are you with me? So sales growth, I like growth. So the higher that number is, the better I like it. The gross margin, the higher that number is, the better I like it. Profits, the higher the profits are, the better I like it. When it comes to costs, the lower the costs are, the better I like it. Are you with me? And interest as well, because interest I'm giving to the bank. So the lower my interest, the better I like it. Are you with me? So things that you like, the highest number is best. Things that you don't like is the lowest number is best.
Yeah, and then the creditors to net worth. Oh, like this was the one that I was confused with. I wasn't sure.
Yeah. And again, now to be perfectly honest with you, so to be honest with you on that one, it's kind of a gray area to me, and even the creditor payment period as well. I would say the lower the better, to be honest with you. Now an accountant will tell you the higher the better, because they want to keep the money and not pay their creditors. Because I'm a supplier to them and I am a creditor, I would always say the lower the better. Okay, because the lower the creditors are, you know, the from a credit perspective, the more I like them. Yeah.
Okay, thank you.
So that's that. And stuff like return on capital employed. Now, like that might be important for the owner's perspective, that he knows what return he's getting on the money he has. From a credit perspective, that's of less concern. And I'm talking about me, but I'm talking about you because you're the credit person. So really, at the end of the day, that's of less importance to you, whether they're making money or not. Now, obviously, if they're losing money, they're not going to stay doing that for very long. So that is your format there, and then you just type in your sorry, it's 2020. So then you just type in your years, and then if you want to do your so that's your thing there. Then if you want to work out your scores here, you know, you do your 0, 1, 2, 3, or whatever the case may be. Company A, company B. I have 5 companies here. Is there 5 companies in the data? Is there? Data question 2. Oh, I've given you 5. Oh, Jenny, I did. Yeah, I'm really tested your resolve there. So yeah, so in the assignment you have 5 companies. So in the 5 companies with the 12 ratios. So yeah, and look, if anybody's panicking, this is an assignment that you're doing at home. I said to you that the exam question will be based on this assignment. I can put your minds at rest right now to tell you that there will only be 3 companies in the exam. Is that okay? We won't ask you to do all these sums because you've only got 40 minutes. So there will not be 5 companies and 12 ratios. It'll be 3 companies or 3 years, depending on the paper that you get. And you know, it'll be a finite number of ratios that you have to do as well. So it won't be as time consuming as this.
Can I just ask why there's an average column in the table?
Just
to confuse us.
But like the average is just like, you know, so if we have 5 companies here, so the average is just company A plus company B plus company C plus company D plus company E. So that's your total. And then if you just then, and because there's 5 of them, I'll just divide that by 5. So the average is just the average. And just, I don't know, I like averages. So I can see that they're above average, they're kind of average. And this guy's kind of average, and this guy is so far below average. He's now it's turnover. So I'm less pushed on turnover. As I bring this down, and sure, all I have to do is drag that down, and there's all my averages done. So if that's 12 and that's 23, no, they're percentages, sorry, so this is a mess. So it's real numbers. So literally you just add up the 5 numbers and if there's 4 numbers, you'd add up 4 numbers divided by 4. If it was 3, you'd add the 3 numbers divided by 3 just to see what the average is.
Okay.
You know, no, and again, okay, it's there, fill it in because I've showed you how to do it. If you don't do it, you'll still get most of the marks for the calculations here. And guys, if you get your interest burden ratio backwards, where you give a 0 for a 1, you know, you'll still come up with, you know, the more or less the same list, and you know, you might be sort of out. And then in terms of a reason, you know, you just give a line just to show that you understand what you're doing. So that's what it's all about. So if the total here is, you know, 36 and you end up with 34 because you gave it a 0 and you should have given it a 2, you're still going to get all the ones you got right. Do you know what I mean? So if you get 2 wrong, now you've got the bottom lines wrong. Yeah, but that's fair enough. But you got 10 of the 12 right. So if you get 10 of the 12 right, you're going to get 80% of the marks. Do you understand? We're not going to say, oh, that 36 is wrong, you get no marks there. No, you got that right, that right, that right. You got 2 wrong, so the number is slightly out. If you got 10 of the 12 right, you will get 80% of the marks. Yeah. Now, if you're very unfortunate and, you know, there's too close and these fall in the wrong order. But look, again, if they're in the wrong order because of a calculation, you know, we'll take that into account as well. Right. And then you just give, based on a reason, saying, yeah, this is good, this is bad, this is terrible, or whatever the case may be. So, and then in terms of the other question that I was asked is, so calculate the most appropriate credit line you would extend. So again, just there's different methodologies within the notes, whether you sort of take your current assets minus stock minus current liabilities as your maximum credit line and apply a percentage. Again, that's all optional down to your own understanding as well. So just knowing the notes, knowing what's recommended, and then either taking or leaving or amending that, as long as you explain what you're doing, we're quite happy that this is a credit exam, not an accounting exam. It's not a maths exam. It's not an Excel exam. Is that okay? So if you have those figures filled in, then, and you know, you just pick. Now I put in a score there just to show that that's the best, that's the second best, that's the third best, you know, sorry, that's second best, third best, fourth best, and worst. So just to follow that all the way down. Yeah. So in all of these, so in the operating profit, so because that's thing I like, the higher the number, the better. Because that's things I don't like, the lower the number, the better. So if you just take that into your thinking, that will sort of give you the criteria for where you look at high numbers or low numbers. Right, so that is that. Is there anything else I have?
I was just going to say 1 or 2 people contacted in terms of the return date. So it's usually the 2 weeks from the day it's sent, which was the 12th. So it's due back the week after Christmas. So any of the days that week, I'm happy. The 26th is Stevens's day. So
yeah,
I don't expect people to be plowing away. So just keep me posted if you're away or whatever. There's no problem at all.
And well, let's just call it, because we're recording this as well.
Yeah. So
let's just even say, you know, say the first week in January. So, yeah, you know, like everybody's back to normal, on the 3rd or 4th of January.
Yeah, that week then. Yeah, the Monday.
So that's grand. So yeah. So
we know
that week. So we'll put, and look, deadlines, hopefully guys, you know us well enough at this stage. You know, we give out, you know, recommended return dates. If you have a personal issue or there's a problem, you know, you're not going to be penalized. And at the end of the day, you know, in terms of your assignment, once we have the assignment in before the exam, we'll include it in the marks, and that's fine. And I think we're all, you know,
Yeah.
flexible, and we'll work with you on that. And we don't expect you to be, you know, taking the 2 days and sort of, you know, lunchtime on Stephen's Day, you know, sending out demands looking for it.
Yeah, no, you're
Just
okay. I won't
take
be.
the
How
week
did
off.
you?
Absolutely. And look, even though I'm taking the week off myself between Christmas and the New Year, I will be taking sneaky looks at emails from time to time. So look, again, please, you know, there's no expectation of an immediate response, because that ain't going to happen. If I do have to be sitting at my desk and an email comes in with a query, I will get to it and I will answer it. And even today, because I know some people are shy and they don't want to sound stupid, guys, I would prefer you to ask 1,000 questions and get it than to be afraid to ask a question and miss out. So even after this session, and even after going back over the recording and looking at it, if you do have questions, if anything is not crystal clear, I'll go in a roundabout way and see if I can explain it a different way until you are happy. Is that okay? So, and if you are studying over the Christmas and you have questions, send them in, and I'm quite happy to go through them and help you in any way I can. As I say, I'll get back to you. I'm not going to be sitting here waiting for them to come in. I will be taking sneaky peeks during the day to see what emails are coming, because that's just the kind of person I am. And I will get to my desk, even if it's stupid o'clock in the morning or whatever. So yeah.
Sorry, no, just to say, because
Denise,
I'm thinking the best way for me to go about it now is to practice and practice and practice until I can get it right. But I won't know if I'm right unless I have solutions. Would you be able to send us stuff with the solutions?
And that's exactly that. So say with the sample trial balances, so well, Angelina, apart from those sample trial balances that I'm going to send you, you have all the solutions, don't you? So you have a solution to the workbooks and the tests and everything. So we definitely can get you this. What I started to say and got sidetracked halfway through is have a go at doing it yourself, and then once you're finished, or if you're stuck, then ask for the solutions, and then compare the solutions with your answers and make sure that you understand why. So if you have a figure of 4,000 and the answer is 5,200, make sure you know, yes, I missed that 1,200 because it was there. I should have included that in the figure. And if you understand where you went wrong, brilliant, and because you do learn more by making mistakes than getting it right. So just make sure, though, that you understand the difference between the answer you gave and the answer we gave. And once you can say, yes, okay, I missed that 1,200, that should have been included there. Yeah, okay, I understand that. If you don't understand that you have one number and the answer is a different number, and you don't understand where it came from, then say, look, can you explain where that 5,200 came from? I got 4,000. And even if you tell me I got 4,000, I've been doing this long enough to know where you got 4,000 from and what you were thinking when you wrote that down, because I've probably come across them over the years as well. Is that okay? So we will get you trial balances and more trial balances, and we will and what we'll actually do is we leave it to your own honesty. So when you have finished them, then just drop an email and say, can you send me the solutions, please? And then we'll send them out to you and you can check them. Is that okay? So that's on request and on demand. Is that okay, Denise?
Yeah, that's perfect, because I mean, I know myself, and I know from college and that it's the practicing and getting your head around it that makes it right for the exams, But I suppose I haven't, to be honest, I didn't put as much time into some of the assignments as I should have.
But
I know
look,
that now. I know
but
that
that's
now.
look, the biggest problem with adult education in any sphere is that we have lives, and you're all, you know, and every credit controller I know right now is under pressure. Work is not getting easier. People working from home, inverted commas, yeah, right. You know, so that puts pressure on people who are in the office. You know, so yes, look, you are under pressure, and of course you would love to have all the time in the world and to get straight A's. Look, at the end of the day, after all of this, you only need 40%. So you only need 28 out of 70 to pass this subject, and you only need 80% to get a distinction. So whether you get 81 or 99, you know, it'll still appear, you know, so you get a pass, a merit, or a distinction based on your grade. So even 80% is as good as top marks. Do you understand? It doesn't have to be perfection. So
Yeah.
the
See, what kills me,
object
I
is to get your
suppose,
damn diploma, you know, at the end of the day.
yeah, because I've done this for, you know, for years, the scoring and all, but I probably was a bit lazy and used reports, you know, that you get off of kind of like VisionNet and all that solo check.
Yeah.
So I
And
wouldn't have
look,
had to do all the hard work myself, maybe sometimes, you know, and it probably that's why I'm finding it hard to grasp some of it.
yeah, and you know, personally, and look, I have had access to VisionNet, and look, and I'm a fan because, and it's not just a lazy way, because there's so much work to do. We can't sit there poring over a set of accounts for 2 days either to make a decision whether we're going to give them 20 grand or not. You know, this is all done in minutes, and we have to have some criteria, and to be able to say, why did you give 20 grand? Because CreditSafe recommended a limit of 50. Now my backside is covered, and at least I have some justification for making the decision, so I won't get shot if and when it all goes pear-shaped. For the higher value accounts, having the kind of methodology that we're giving you here on the scoring models, are you going to do it for your whole ledger? Never. There's not enough time in the world. If you take your top 3 distributors and do this exercise for them, you can see problems before they become problems. We can identify our highest risk distributor, our company in a particular area, that we can start taking steps even before there's a problem. And that's when credit controllers and credit managers are worth their weight in gold, because they see problems. And with the methodology that you're learning here and the scoring systems we're showing you, you can put in management accounts, you can put in unaudited accounts, you can put in whatever numbers you have that's most up to date, that will give you a better picture of the business, rather than waiting 2 years for CreditSafe or VisionNet to update their records from the company registration office, you know. So that's why this is so helpful, and I'm hoping that at some stage in your careers you will get to use it, and we're here when that happens as well. So if it's 2 years down the line and you need a refresher, we're happy to provide that as well.
Jacqueline.
Yeah.
Just a question. Do you know, like, so the first 3 modules that we did, like, I kind of found all right. This one, the risk assessment I found really hard, and like in short tests and all, I've just done absolutely diabolical on. All right.
Great, yeah, but that's brilliant.
But do you know what I have to say? We had Angelina met us last time and gave us an oversight of the assignment, the force assignment. And after that, I looked at it from her showing us the kind of breakdown to it, and I was like, all right, I kind of get it. And I got okay marks on it. I actually got all right marks, and I'm shocked at myself I did. So with you showing us this, because I think when somebody shows you something instead of looking at something, it's so much easier.
Yeah.
So with you doing this, I'm kind of like looking at it and saying, okay, that makes better sense, which I know most of the people don't do that. But even like when Angeline did it the last time with me, where it was for her day, and I know her day, when she done it the first time, she found it very stressful. Isn't that right, Angelina?
Not necessarily stressful. It's just everybody has their own way of showing things, you know, and it was very much earlier on in the modules as well.
But
so
it helped a lot.
Yeah, and look, that's why we're here, Paul. That's why we're here. And, you know, yes, and of all the 4 subjects, and if this is your first 2 subjects in the diploma and you're absolutely dreading the next term is easier.
This
you
is the
know.
only term.
So risk is probably the one that causes most difficulty to students. And look, once
Yeah,
you
because I found the credit
relax,
management fairly easy. You know, I just grasped it.
because that's what you're doing all day long. So
And
this
it
is
was common
something
sense to
new.
me, and I could put it into, you know, picture it in my mind and how you
Yeah.
do it in a practical way and everything. But with
Yeah.
the
And
risk
people just kind of
assessment,
want to avoid the accounting, the figures, the ratios, all that kind of stuff, but you
Yeah.
can.
It's just for you know, and at the end of it, you know, as a diploma holding credit professional, you know, and I know maybe I'm alone. Like if I was a populist person and say, well, look, this is the subject, you know, maybe we should review the subject. Sorry, I'll turn that off. What was I going to say? No, I've worked in credit management all my life, and guys, this will stand to you for the rest of your career in credit. And not only will it stand to you the rest of your career in credit, but anytime you get a set of accounts, you'll be able to look at it. And even if you remember 3 of the ratios, you'll be able to give an opinion as to whether they're good or bad. And just having that knowledge in your head is no weight to carry, and it will honestly stand to you for the rest of your careers. You know, and that's why I will persist with it. Paul, I'm delighted that you found these sessions helpful. That is why we're here. And you just go and do it, and you know.
Declan, sorry, but what happens if you pass 3 modules and fail one?
Failure is not an option, Paul.
I kind of gathered that from every time you say it, you're like, no one's gonna fail, no one's gonna fail. But I think when you look at it, you're like, I'm looking at this and I'm like, you know what I mean?
Okay. What we do is so okay, let's I know I've been flipping saying failure. Now I guarantee you, if you can do the 2 assignments and reproduce an edited form of that in the exam for those 2 questions, you will get through it with flying colors, even if you don't know anything else. So that's number 1. Number 2, if it is a disaster, and you also have 10% of the marks are a portion of then for your short tests, you have a portion of 20% for your 2 assignments. So you have 30% going in. You only need to get 28 out of 70 in the exam to pass it. If you fall short of the mark, there is, so 40% is the pass mark. We have a system which is called pass by compensation. So if you just fail, so say you get 36, 37, 38, then as long as you get more than 50% in one of the other subjects, we will give you a pass by compensation, it's called. So so you will get through it. If you do something disastrous, like you get a 20%, which again is next to impossible. The only person I ever saw who failed the exam, and I sat and watched her do it, and I was powerless because it was in the old days when we were in an exam hall, and she spent an hour and a half trying to get her balance sheet to balance and only attempted 1 question on the exam paper. And had she left it and moved on, she probably had 60% of the marks. Because she didn't answer any of the other questions, she couldn't have got marks in the other questions. So that's the only sort of example I have of people who did it and failed. And even for her, we will set another exam in the future. So we'll sit down with you afterwards if you badly fail. I think I've done it 3 times in 20 years where I actually sat down with somebody who had a nightmare and went through the whole thing with them. And then when they were ready to resit the exam, we put 2 hours aside and worked with them to get over the line. So hopefully, does that put your mind at rest?
Absolutely. And I say everybody else's as well.
Yeah. So, okay. So look, the fact that you're here and the fact you'll be on the revision on the 14th of January, yeah. I'm happy that Angelina and I will do everything we can to get you over that line.
Yeah, and it's an open book exam as well, you know, so like don't be stressing and trying to think you
Yeah,
have to
so I know
remember the
every day,
ratios.
every day is like,
So you'll have all the formulas in front of
Yeah.
you, and hopefully you'll have your templates from your mock exam as well. So, you know, come on, guys, you know, that's that is that.
Angelina,
Yeah.
Yes.
could I ask you a favor? Would you be able to send me like the answers to like the short tests just to look over?
Yeah, I've sent everybody the solutions to the short test, but no problem. Yeah, absolutely.
Yeah.
Just so you know when you look over before you actually say exam because of that, like.
Yeah, I'll send them in a batch, actually, the solutions for everything that you'd like, the tests, the assignments, in one email so that you have everything together.
Yeah, it'd be
That's
great.
fine.
Yeah, could you send it to me as well, please? I suppose
Oh,
everybody
I'll
would
send it
like
to everybody.
Oh,
I'll
yeah,
send it
lovely.
to
Thank
everybody.
you.
Yeah,
I'll
yeah,
take
that's fine.
note to be, yeah,
That's
absolutely.
like a really good Christmas present, I have to say.
Great.
Well, no.
I'm delighted I could help.
Guys, go and enjoy the Christmas, whatever happens anyway.
Yeah.
And have a wonderful one. And shall we see you early in the new year? Stay in touch with us, and if there is anything, drop us an email. And I'll send an email now. It takes a couple of hours for the video to process and update and all that kind of stuff. So it'll probably be the morning now before you see the link to the video. But I'll generate it now tonight and get it over to you in the morning. And stay in touch with us, will you?
Million, guys.
Yes,
Yeah, well,
great.
happy Christmas to everybody.
Merry
and-
Christmas, everybody.
Thank
Have a
you.
great one.
Happy Christmas.
Take
Yeah,
care.
and
Bye.
have a happy new
Bye.
year.
Bye.
See you in
Bye.
January.
Bye.
Okay.
Now I'll just actually stop the recording.
Oh, yeah.